Welcome back to Sullivan Financial Partners' Confident Retirement Journey. Today, we're going to continue our series on ages you must know in retirement. Today, we're going to talk about 3 things you have to know, or 3 ages you have to know for the later years. First, age 66 or 67. This is where we're going to take a look at what is your full retirement age. Your full retirement age depends on what year you were born. It could be anywhere from 66 to 66 in some months to age 67 if you're born 1960 or later. These are important things to keep in mind as you're calculating your full retirement benefit. Okay, at full retirement age, you can claim your Social Security without any reductions. It also hasn't delayed it, so you're not getting any of the increases for waiting as well. Working while collecting Social Security before your full retirement age can actually reduce those benefits. So if you're still working, it very rarely makes a lot of sense to start your Social Security. But once you reach full retirement age, if you want, you can be working, earning an income, and collect your full retirement benefits as well. At full retirement age, earnings no longer will affect it, so you're free to go. The next age is age 70. This is your maximum Social Security benefit. So if you didn't take it at full retirement age or sooner, and you delay it, you can keep delaying it all the way up till age 70, and this is the highest possible result or income payment you will get from Social Security. Delaying it increases 8% per year past your full retirement age. Benefits are generally 50 to 60% higher than if you'd started them at the earliest time, which was age 62. It can be a powerful strategy for those with other income sources, or if you're somebody who has really good longevity, then it's probably a better strategy to wait. If you're somebody who doesn't have a good longevity in your family history, then maybe not. But something to keep in mind. Age 73 is a big one. This is required minimum distributions. This is one that gets overlooked too often in planning and things that can come back and bite you if you're not careful. At age 73, Uncle Sam says we have to start taking money from our 401ks, our 403bs, our IRAs, and other retirement accounts. And do we all know why? It's because they want their piece of your pie. We know that at some point they want to make you start taking money out of those accounts because then you have to pay tax on it. And in fact, they want it done so much that they said if you don't do your required distributions as you're supposed to, it can result in up to a 25% penalty. I don't know about you, but paying a 25% penalty doesn't sound like a good thing to me. Now, the required distributions are calculated based on a tax table or a life expectancy table in the IRS tax code. And we'll help calculate that for you. That's not a big deal. What do we do with it? That's the main thing, the main question that we hear in our office. Craig, what am I supposed to do with this money? Maybe I don't need it for living expenses. Maybe it's more than I need. Well, there's a lot of different options on what you can do with it. Number one thing is we got to get it out of those accounts. We've got to follow the rules. But the options can be, well, spend it. Well, Craig, I don't really need to spend it. All my needs are covered. Well, then let's think a little bit bigger. Let's take an extra trip. Let's go buy something that you've always wanted and you've been holding off. Enjoy the money that you've worked so hard for if it fits into your plan. You can reinvest it. If you just want to let things keep growing, we can take it out of your retirement accounts, pay the tax, and reinvest it into an after-tax account and let it continue to grow. You can donate it. You can take those required distributions and donate them directly to a charitable organization. There can be some tax benefits of doing so. Another one that we didn't even list on here is if you're concerned about leaving a legacy to your loved ones, you can take that required distribution and potentially leverage it to leave your loved ones a legacy tax-free. That's a strategy that interests you. We'd be happy to talk through it with you. As part of the Confident Retirement Journey, we're going to address and make sure that our clients are following all of the rules. We want to make sure whatever is most efficient for you is the way that your plan is built. Your plan's different than anybody else's. If you don't have a plan and you would like one, feel free to give us a call. We'd be happy to visit with you to see if we're the right fit to help walk you through a confident retirement journey. Until next time, keep thinking bigger.